It was a mess in 2022, not for the whole world, but for the crypto market. Crypto prices hit a peak in late 2021 and they dipped down to hit disgraceful lows. We are still caught up in that sour story, regardless of how much we want to try to deny it. However, hope is looming. Expectations are rising. Why? Because we've seen the bigger picture. Is the worst over for the crypto market? The same question was addressed in June. This was around the time when Bitcoin recorded a notable recovery, breaching the $27,000 mark. As usual, this led to increased speculation that the asset was positioning itself for significant gains in the crypto industry. Despite Bitcoin's overall strong recovery in 2023, a certain crypto expert noted that the worst might not be over for the flagship digital asset. This was Mike McGlone, a senior commodity strategist at Bloomberg. In his explanations, he argued that various factors suggest a bumpy road for the digital asset. He acknowledged that Bitcoin and cryptocurrencies found themselves at a critical juncture as they battle with the possibility of the first United States recession in their history. Cryptos faced their first US recession, a potential stock bear market, vigilant central banks, and high interest rate competition, and they have bounced in 2023, indicating consensus thinks the worst is over. We disagree, he said. McGlone further asserted that the massive liquidity injection experienced in past years led to Bitcoin's peak in 2021, showed that speculative excess had characterized the crypto market. According to him, the excesses were indicative of ongoing risks. Plus, he mentioned deflationary signals such as plunging commodity prices and reduced bank deposits, which he believed were evidence of the impact of the Federal Reserve's tightening measures. Around June, according to Chanpeng Zhao, the CEO and founder of the crypto exchange Binance, "I think the worst is probably over. We've seen a pretty sharp drop." He discussed the skid in crypto prices, which some choose to label as a full-scale crypto crash. While speaking at a conference, Zhao noted that he does not expect any more major price drops for crypto anytime soon. As reported, he warned that not only businesses that operate with sustainability in mind and not short-term customer inducements would stand the test of time. If you're only getting users because you're using incentives to attract users, that's not a real business model. Eventually, you're going to run out of money and you'll crash, he said. CZ's belief is that the worst crypto's plunge was over with a life raft for crypto bulls. Well, there might be no major price plunge again, just as Zhao predicted, but minor ones have stabbed our hopes of a better crypto market. Also, in Mark Cuban's opinion, crypto is crashing because it's going through the low that the internet went through. Back in 2022, Cuban acknowledged that the cryptocurrencies were on the same downtrend that tech and internet companies hit in the early 2000s. Bitcoin dipped below $20,000 several times in the summer of 2022, its lowest level seen since 2020. Sales of NFTs equally plummeted down between January and March of 2022 as well. So Cuban addressed this slump in a tweet. Crypto is going through the low that the internet went through. After the initial surge of exciting apps, NFTs, DeFi, P2E, or play to earn, we saw the imitation phase as chains subsidized the movement of those apps to their chains, aka bandwidth and storage subsidies by startups in the 2000s. We never knew crypto's pattern of growth could be in alignment with the internet startups. But isn't it too slow though? The internet is a big deal after all. It is a rough ride. The crypto market has been on this ride since last year, especially with the failures of major crypto projects like FTX, Terra USD, Three Arrows Capital, Celsius, Voyager. Prominent startups have also slid into the red too. When these crashes occurred, FTX's Sam Bankman-Fried said in an interview that the worst of the crypto rout that sent tokens plummeting and caused the collapses of many firms was over. He said that his exchange still had a few billion on hand to further stem turmoil across digital assets and the companies that trade them. SBF had long maintained that he would be able to step in to ensure cryptocurrencies and the broader market survived the downturn that saw the Bitcoin price tumble. In addition, Sam Bankman-Fried's Alameda Research gave Voyager Digital a $200 million loan plus a facility in both Bitcoins and stablecoins, in light of Voyager's downfall after hedge fund Three Arrows Capital defaulted on a loan from the company. Despite these kinds of bullish claims, crypto was still launched into the shadows, and Sam Bankman-Fried still got arrested. However, a new metric just came to light, and this might be just what we have been waiting for. It's the S&P 500. According to reports, the S&P 500 is poised to test record highs in 2024. Rising profit margins and higher corporate earnings should serve as tailwinds for stock prices next year, lending a lofty gain in the S&P 500. An expert said, if we can avoid a recession next year, our bear case, then we think the chances of a year with potential low double digits returns is quite likely. The metric always seemed to only work for the stock market. However, crypto might also get a chance, according to crypto analyst Dan Gambardello. A gain of 10% for the S&P 500 would send it to about 4,800, which is just a few points below its record high reached in January of 2022. The expert is encouraged by the fact that payrolls and incomes are still expanding at a healthy clip relative to pre-pandemic trends. That is, steady economic growth should help fuel the record profits for companies in 2024. Wall Street's favorable nickname for a surging stock market is a bull market. Markets tumbled the previous years on fears about the worst inflation in decades would ravage the economy. Wall Street got spooked by the aggressive measures the Federal Reserve took to combat high inflation. The Fed has yanked interest rates to their highest level seen since 2007. Of course, the aim was to drive down inflation by slowing the economy and dragging down prices for stocks, bonds, and other investments. This impact left many investors bracing for a recession for months. Meanwhile, inflation has erased off since hitting a peak last summer. For a long while now, the crypto market has been affected by the same factors that plague the stock market. Of course, their growth is not on the same pace, but they are markets which have seen pumps and dumps. Volatility is also a common factor. If the stock market gets to see the light starting in January 2024, will the crypto market remain in darkness? Of course not. Meanwhile, the crypto market is also bracing up to embrace gains that attract the spotlight, although there are still sour parts of this progress. Bitcoin historically trades with traditional assets despite being a fundamentally decentralized asset. But there was a recent decoupling from the S&P 500 which could signal a changing outlook for mainstream investors. An expert from Street Crypto noted, "We have many years of correlation from 2020 on. It was like a 40%, 50%, 60% correlation where Bitcoin moved roughly in the same direction as the S&P 500. In 2023, there is a 0% correlation. That's because we have this flight to quality. A lot of people are paying attention and not happy about what's going on with inflation, with printing, with debt, with everything else that's going on. Plus, people are not oblivious to the fact that institutions are jumping into the space and are about to pump Bitcoin." In a report, the Bitcoin S&P 500 correlation chart shows the 52-week returns of both markets. Both have diverged from the historic link as Bitcoin has seen price gains of more than 27% in the past month, while the S&P 500 has fallen by 1.8%. Moving forward, many have suggested the rise of Bitcoin's price is hinged on the approval of spot Bitcoin ETFs by the US Securities and Exchange Commission, which has been uncomfortably delaying the approval for the longest time now. Many companies are lined up to receive the booms that come with the launch of these spot Bitcoin ETFs. Expectations are lined up too, however, no one knows when the SEC will have a change of heart. Shark Tank investor Kevin O'Leary had recently cautioned that it could take another year and a half for the SEC to approve a spot Bitcoin ETF. He believes that increased regulatory clarity is important for the SEC to approve a spot Bitcoin ETF. He further explains that a spot Bitcoin ETF requires a transparent and compliant crypto exchange to confirm the spot market pricing daily, hammering on the fact that the SEC will not approve until there is such an exchange. There is not going to be any Bitcoin ETF until there is an exchange that is compliant with the SEC, he said. O'Leary noted that the NASDAQ-listed cryptocurrency exchange Coinbase is the leading candidate for the compliance the SEC requires. However, the crypto trading platform is currently in litigation with the SEC, which charged Coinbase in June for operating as an unregistered securities exchange, broker, and clearing exchange. Since then, Coinbase has been trying to get the lawsuit dismissed, insisting that it does not list securities. The ride has indeed been rough. However, this does not imply that crypto holders won't hit the jackpot soon. This season is just uncomfortable to secure gains. Or what do you think? But that's going to do it for today's video. Make sure you subscribe and hit the notification buttons, and we'll see you in the next video.